Now we can actually use ABC for another purpose, which is customer profitability. This is not the intended cost of ABC. It was really intended to understand manufacturing costs, but it is actually quite useful in looking at service costs to service a customer. What we're going to do is we're going to have the profitability of customers be the price paid by the customer minus cost of goods sold for the product sold to the customer, and we're also going to charge the customer profitability the internal cost of servicing that account. This way we can then look at which customers make us money, which ones may make us little or no money, or worst case still, which customers may actually cost us money. And the idea is that if we could know all this data, we could array all our customers along a vertical axis of cumulative profit and horizontal axis of the customers from most profitable to least. And so as we start with the first customer, very profitable, eventually it's less and less profitable until we hit a peak. And after this peak, each customer costs us money because our total profit drops for everyone that follows this dotted line. We would love to find this spot because that represents the customer breakpoint on which one makes us money. And for the customers on the right, we would do a couple things. We would either counsel them to make them profitable by having them change their behavior, or change our pricing so that we have them pay for their extra use of our resources. Or if none of these are going to be acceptable, they can leave or we can fire them. We can fire customers. So how do we do ABC with customer profitability? It's the same thing. We say what are the activities, then we can assign costs based on those activities, then we can determine the profit per account, and then we could take actions if necessary for each customer based on their relative profitability to the company. An example is we have a building supply company called Manning, and they did an analysis of their ABC for their customer facing activities. And they identified 5 activities right here on the left, the cost drivers they determined, and then now they've done the math to get the total dollars per unit of driver used by the customer. The first one up is their largest customer, which is Haskell Construction, and we'll grab data for that particular account, use these ABC rates, and then determine the overall profitability of Haskell. So on top we see the carry forward of the ABC rates. On the bottom we see the consumption of the services by Haskell. This column here is the activity by the various 5 activities for Haskell, and then we're pricing it. So for every visit to the customer, it's $400 that we see from the top. It costs us $1,600 to visit Haskell. They had 3 remote contacts at $30 a piece, so they cost $90 there. Processing, they had 6 shipments, $150 per shipment, $900 there. Repackaging, 2 times at $120 each, $240 there. And the billing and collection, 5 times at $40 per incident or per billing cycle is $200. So we now have $3,030 as a total cost to service Haskell. We can then use this information to look at the overall profitability of Haskell to the company, which is here. If Haskell bought $79,000 worth of items and the cost of goods sold is $62,000, our gross profit is $17,000. We probably had that already. But now we can further elaborate and say $3,000 is the cost, our internal overhead cost, to service the account. So we really made $13,970, which represents a profitability ratio of 17.7%. This is only Haskell. First of all, at least they make money. But we need to look at this compared to other customer profitability for our various other accounts and then see what actions are necessary. Summarizing Mod 19, we looked at ABC, first on what is driving it, which is the shift toward automation. Second, we did an analysis of how does ABC work, and it's a multi-step process starting with the department costs, then the functions, then allocating to activities. Once we have activities, we determine the most appropriate cost driver and derive a rate based on the expected volume of the cost drivers for the upcoming period, and that gives us an ABC rate. That rate we then use to charge the overhead to the various products and jobs in the company. And that is how ABC works. And we learned on LO3 that we can apply the same concepts to gauging the customer profitability. Therefore, we can then determine which accounts make us money, lose us money, and what remedial actions might be necessary to fix the ones that are losing us money. All right, so that is ABC. Thank you. Bye-bye.